The first thing I want to do is introduce you to several terms in cost accounting because we'll be utilizing these terms a bit. Uh, the first term is what we call prime costs, and prime costs are all the direct manufacturing cost of a product, and these include all the direct materials and all the direct labor associated with manufacturing the product. When I say or when I refer to prime costs, then I'm referring to both direct materials and direct labor. Okay, conversion costs. Conversion costs are all manufacturing costs incurred in converting direct materials into a product. And conversion costs include direct labor and they also include overhead. So when I am referring to conversion costs, what I am referring to are or is direct labor and overhead. Now, as we go through the process costing demonstration, what I'm going to do is I want to introduce you to the two major types of process costing we're going to be exposed to. And the first one is called process costing utilizing the FIFO method. And the FIFO method computes equivalent units, and we're going to learn these are equivalent units of production based only on production activity in the current period. And we're also going to have another method of process costing, which we call the weighted average method. And the weighted average method combines units and costs across two periods in computing equivalent unit values. So let's go ahead and start out with the concept of the basic concept of process costing in terms of equivalent units of production. We went over this to a certain extent in class. Let's just kind of go over it again as a refresher. Equivalent units of production are basically how we measure the value of what's been put into a particular product or a group of products. The equivalent unit of production tells us how much effort has been expended in completing a unit. In other words, how much effort has basically has been expended on this unit. And we'll get into how that works in a few minutes. Now, I can also say, instead of just a unit, I can say units. As an example, how much effort has been expended in completing a number of units. I can do it for multiple units. And if I know how much effort has been expended in completing a unit, then I should be able to know how much effort remains or how much effort is it going to take to complete that unit. Or again, if I have a group of units, I can also determine how much effort would remain to complete a number of units. Now, if we take a look at this timeline here, we can look at a unit in process, and it's between 0%, meaning it's not started, and 100%, meaning it's completed. So when we talk about computing equivalent units of production, we're talking about literally the percentage of completion. If something is 40% complete, that means 40% of the effort has been put into it. That also means then that 60%, there's still 60% of the effort yet to complete it in order to get to 100%. Now, here's some examples of effort expended versus effort required to complete, and they're very simple. A unit that is not started, in other words, it's at 0%. A unit not started will take 100% of effort to complete it, number one. Number two, a unit that is 25% complete, in other words, about here on the timeline, will require 75% more effort to complete it. Number three, a unit that is 85% complete, over here on the continuum, will require 15% effort more to complete. A unit that is 100% complete, or that is complete, which is 100%, will require 0 additional effort to complete. And I can apply this to one unit, or I can apply this process to 50 units or a million units or whatever I want to utilize. Now let's go on and talk about the physical flow of units through a process. Now remember, the units that a process system processes, typically the units are pretty much all the same, and sometimes it's hard to differentiate one unit from another other than where it happens to be within a process. Let's use this example right here. Captain Crunchy makes crunch bars and uses process costing. The crunch bars go through two processes. The following data is available for process one for the accounting period. So we can assume that when the crunch bar is completed with process one, it's going to then go into process two. But for our purposes of this example, we're only dealing with process one at this point. So the information here says April's beginning inventory included 60,000 units. In other words, 60,000 units were in the beginning inventory of process one. So we're going to list those 60,000 units. We also know that during the month, our production record showed that we added another 322,000 units into production during the month. So we add the 322,000 units. So if we consider, basically, if we started out with 60,000 units and we placed another 322,000 units into production, that means we need to account for the month of April, a total of 382,000 units. They have to go somewhere. They're either they're somewhere in inventory or they've been completed literally. So now we make some assumptions about inventory movement here, and we're going to analyze basically physical movement of our units. Now, one of the important things to remember when we're doing this analysis is at the end of the day, we still have to account for a total of 382,000 units. That's very important. So no matter what happens with these numbers, we still have to account for 382,000 units. Now, our first assumption is that we have units that were completed from our beginning inventory. So in that case, we take a look at our beginning inventory and we know there were 60,000 units. So we're assuming those 60,000 units were actually completed. So we're going to insert that number, the units that were completed from the beginning inventory, 60,000. Okay, we also know from the problem example that 82,000 units remained in production. So we can make our ending inventory, it'll be equal to $82,000. Or sorry, 82,000 physical units. So now we have 60,000 plus X plus 82,000 equals 382,000. So X in this case, if we do simple algebra, would total or would amount to be 240,000 units. So now we know that 60,000 units were completed for beginning inventory. 240,000 units were actually started and completed during the process, and 82,000 units ended up in ending inventory, and we have our total units accounted for. Now we're going to take a look at computing the percentage of effort in the production process, and I'm still using the exact Captain Crunchy example. The difference is in addition to I talked about physical units in our first example. Now I've added the percentage of completion that these units have gone through during the process in April. So right now, that's what I've added to the problem. And again, we can take a look at, we have a continuum line where it says 0% means it's something that has not, it's a unit that has not, physical unit that has not been started. And at 100% is a unit that's been completed. Now, we can make some observations. First of all, we need to look at the units in our beginning inventory, and we have to make two observations about them. And the first observation we make is units from beginning inventory will take 40% more effort to complete with respect to materials. So that means if those units have been completed, we had to add another 40% of effort to those units. And how do we come up with 40%? We know to be 100% or to be complete, have to be 100%. We know we've already expended in that beginning inventory 60% of our effort in order to complete it. So 100% minus 60% means that we have 40% more effort to complete it. With respect to materials, now you'll notice here where I talk about the inventory, the units that are completed, I mention here that these 60,000 units, as an example, are 60% complete with respect to materials and 40% complete with respect to conversion. So in some cases, depending upon what the product is and where it is in this continuum type of process, the materials versus conversion costs have different percentages of completions. So I have to account for materials and conversion cost separately. Now, also from my units in beginning inventory, I do have to account for the conversion costs. So units from my beginning inventory, if I basically say that I did complete them from inventory, they will take 60% more effort to complete with respect to conversion costs. And that's because I was told that in my example that the units in beginning inventory had already had 40% of effort put into them. So I take the 100%, which is complete, minus the 40% of the effort that has been expended so far, which means if I'm assuming that those beginning inventory units have been completed, we had to add another 60% effort to those units. Okay, now I go on to the units that were started and completed during the current period. And in this case, if something is started, it's never, it hasn't been, or it's just been started, it would be at 0%. And then if it was completed during the period, that means it ends up at 100%. So units started and completed during the current period will take, not taken, will take 100% of effort to complete with respect to materials. Also, units started and completed during the current period will take 100% of effort to complete with respect to conversion costs. So anything that started and completed in the same period means you put 100% of effort into it. Now we have to be concerned about what is the amount of effort that has been expended on our units now that are remaining in ending inventory. So units remaining in ending inventory, we're told that they were 80% complete with respect to materials and 30% complete with respect to conversion costs. So units remaining in inventory had an 80% effort expended in the period, basically with respect to materials. Also, units remaining in ending inventory have had a 30% effort expended in the period applied with respect to conversion costs. So we know now that we've now developed all the percentages that we need to calculate what we call equivalent units of production. So let's take a look at the next slide. And again, I've added a third paragraph here, but right now this third paragraph will not be necessary to the computations. It deals with dollar values in the general ledger accounts. Right now we're dealing with physical unit movement, and also then we're going to be dealing with what we call computing equivalent units of production. Now, if you take a look at this first schedule here, this was one of the first schedules that we completed several slides ago. We had our beginning inventory of 60,000, and again, this comes from our Captain Crunchy example. We know we placed 322,000 units into production, and if we did that, that means for the month we have to account for total production of 382,000 units. Now what we're going to have to do, or now what we're going to do is, we know our physical unit movement, and again, I'm going to recompute that here from our previous slide, and I show the total units I need to account for are 382,000. I know I had 60,000 units in physical units in my beginning inventory. I know that I had 82,000 units in my ending inventory. Now I still have to account for the remainder of the units that will equal 382,000, and in that case it's going to come up to 240,000. So now I know how my physical movements have basically moved throughout throughout process one. Now what I'm going to do is, now I know my physical units, but I don't know the amount of effort, in other words value, that has been uh, placed into them. So I'm going to calculate what we call equivalent units of production. And the first item I'm going to calculate is the units that were completed, that units completed in process one that were part of my beginning inventory in process one. I had 60,000 physical units. Now you will remember that my units, they were reported as 60% complete in our beginning inventory. That means that we had to, in order to complete them, we had to expend 40% more effort to complete them. So it's 100%, which is complete, minus the 60% effort expended, meaning our materials percentage is 40%. So I take the 40% and I multiply it times my 60,000 physical units, and that comes up to a materials equivalent units of production of 24,000. In other words, that represents the amount of effort that I've had to expend and my beginning inventory units in order for materials in order to complete them. Now I'm going to take a look at the units that were started and completed and transferred into process 2. So if units were started and completed in the same month, that implies I had to put in 100% effort to actually complete those units. So I take 100% effort on materials times $240,000 or 240,000 units, and I come up with equivalent units of production for materials of 240,000 units. Okay, next I need to consider the amount of effort I've put into the units that are not completed yet. We started them during the month, but we weren't able to finish them. So now I have to account for the amount of effort that I put into those units. So in this case, the amount of effort I'm told is, at the end of April, basically of the 82,000 units, they were 80% complete with respect to materials and 30% with respect to conversion costs. So I'm going to take my materials percentage first. And again, I know I started out at 0, and now I know I've taken, if they're 80% complete, that means I had to expend 80% effort. So I take the 80% times 82,000, and my materials equivalent unit production is 65,600. Okay, now I've done my calculations for equivalent units of production, or units of effort for materials. Now I've got to do a calculation for my conversion cost, and again I do those separately because those are different percentages of completion. So in terms of conversion costs, again, units that were that were completed from my beginning inventory. According to my problem here, those units were 40% complete with respect to conversion costs. Okay, which means if they're 40% complete, in order to complete that beginning inventory, I need to expend another 60% effort. So in this case, I take 100% complete minus the 40% effort that I've expended to date on the beginning inventory. That means the amount of effort I had to expend was 60%. Now I go down to the units that were started and completed during the month. If I start something and I complete it, that means I put 100% effort into it. So in this case, it's going to be 100% times 240,000 units. Gives me conversion EUP of 240,000 units. Okay, lastly, units that are remaining in process one, the ending inventory. Again, I have to determine how much effort has been put into those units during this accounting period. And again, we're told 30%. So in this case, the amount of effort to get to basically that has been put into the ending inventory at this point is 30%. So we take 30% times the 82,000 physical units, and we come up with conversion effort of 24,000 EUP. Now I simply add up the materials EUP and the conversion EUP, and that tells me the amount of EUP effort that was expended during the month for process one. And what we're saying here is there are 329,600 EUP of effort expended for materials during the month of April. There's 300,600 units of effort of conversion that were expended during the month of April. So now I have those numbers. Now what I want to do is calculate what I call my cost per equivalent unit of production, again using FIFO costing. Now this is the slide where it's important that I now have my third paragraph, because it talks about the values that have been that are located or been added to my general ledger accounts. So I'm going to take a look at my two costs separately, my material costs and my conversion costs, and I'm going to calculate an equivalent unit of production per material cost and also conversion costs. So the cost incurred this period were $850,360 in terms of direct materials. Okay, now based upon the equivalent units of production calculation, what I know is that during the month of April, I expended 329,600 EUPs of effort. I take that then and divide that into the $850,000, and it comes up to a cost per EUP of $2.58. Now I've got to do the same process for the conversion cost, and again my total cost incurred during the month was $649,296, so I insert that there. Now the EUP produced during the period for conversion cost happened to be 300,600 physical or EUPs, so I'm going to insert that there as the divisor. And in this case, then, my cost per EUP will come out to $2.16 for conversion costs. So now, based upon that, we can go and we're going to be able to do some inventory calculations. Before we do that, though, I want to go back and talk about the mechanics of the inventory calculation we're about to make. If we take a look at our traditional inventory calculation, which I've drummed into your heads over over time, we start out with beginning inventory. To that we add our inputs, in this case production inputs. Then we subtract out the amount that is transferred out of our inventory, and that equals then our ending inventory. Now what we're going to see is we're going to actually have values available for our beginning inventory, our production inputs, and our ending inventory. Well, that's kind of a problem because we still have to solve then for the amount transferred out of inventory. So again, we use simple algebra to rearrange our formula. We start out with our beginning inventory plus our inputs, but now I take my ending inventory and I'm going to subtract that out, and that's going to end up with then the amount transferred out of inventory. So let's see how that actually is going to work. Now again, over on the right hand side you can see the FIFO excuse me, the calculations regarding equivalent units of production, and you can also see the schedule with the cost per equivalent unit of production, which we've done on the previous slides. Now what we're going to do is we're going to use that inventory formula that we've created, or that we basically modified in our in the previous slide, and we're going to say start out with beginning inventory, add our costs that are charged to process 1 during the period, our inputs, minus the value of my ending inventory, and that will equal then the value of the dollar value of our inventory transferred out of process 1. So basically, with all the information on this slide, we can do this calculation. So I'm going to start out with my beginning inventory balance, and I'm told that my beginning inventory balance included a balance of $118,472 for direct materials and $48,594 for conversion costs. So I take those two numbers together. When I add them together, my beginning inventory value was $167,066. Okay, now I need to add the cost charged to process 1 during the period. And again, my direct materials for the month, the production department had $850,368 of direct materials and $649,296 of conversion costs charged to it during April 1st. So those production costs were charged to process 1. So there's my direct materials plus my conversion cost. If I add those together, that's the value now, the dollar value that I've added to process 1. Now I take the value of my beginning inventory and the value of process 1, and I'm going to have to subtract out the value of my ending inventory. However, there's no place that you can see, or there's no place that indicates what the value of my ending inventory is. So in order to calculate that, what I'm going to do is I'm going to take separately in order to calculate the value, I'm going to take the direct materials. And in the case of again, this is my ending inventory. Now for direct materials, I know the cost per EUP, the cost per unit of effort is $2.58 per unit of effort. So I insert that there. I also know that if I look at my equivalent units of production chart, if I look under EUP for materials, I go down to the second to last bottom, or the second to the bottom line, and I locate the units in ending work in process. And what this tells me is I have 65,600 units of effort in my ending work in process inventory. So I take 65,600 units of effort times the $2.58 per EUP, and I come up with a value of 160 value in my ending inventory of direct materials of $169,248. Now I'm going to do the same thing with conversion costs. My conversion costs were $2.16 per EUP. Again, when I take a look at the equivalent units of production and the equivalent units of production chart, I go down under conversion cost and I look at the amount of units in ending work in process, and they're 24,600 units of effort. So I'm going to take the 24,600 EUP times $2.16, and that equals $53,136. So the value of my ending inventory comes out to $222,384. So I take the value of my beginning inventory plus the cost I've charged during the period less the value of my ending inventory, and that should equal the value that has been transferred out of process 1, which would be $1,444,346. Now I'm going to show you how this works via journal entries, at least utilizing T accounts. On the left-hand side here, what you see in this center area is the calculation I did on the previous slide. Also, now you also see over on the right-hand side the T accounts, and you see work in process for process 1 has a total of $167,066, and that corresponds to the value of my beginning inventory. So that's my beginning inventory work in process balance for process 1. Now to that, I add entry B. And in this case, these are the costs that were charged to process 1, and they consisted of raw materials, $850,368. So there's my credit, and my credit to, let's say, payroll and overhead applied. Sorry, payroll payable and overhead applied would be $649,296, and the corresponding debit then would be to work in process of $1,499,664. Now I go on to my next entry, which is the value transferred out of work in process, entry C. And in this case, I'm going to credit work in process for $1,444,346, and I'm going to debit that same amount to finished goods to move. And basically, I shouldn't have said finished goods in this case. I should have said work in process, process 2. So then I debit work in process, process 2 for $1,445,346. Now, what you can also see is if I take a look at work in process, process 1, I now have a balance when I add my debits and credits together. Work in process is equal to $222,384. So the total value, you can see my ending inventory does correspond to $222,384. So that's the end of the demonstration for process costing for FIFO. Now we're going to go through the exact same problem with the exact same numbers, percentages, and so forth, but now we're going to utilize the weighted average method. Again, if you will remember the physical units in process, we did that calculation several slides ago. Beginning inventory plus the units that we put into production means that we have to account for 382,000 units. Now again, when I want to compute my equivalent units of production, I have to determine what my physical inventory movement is in process 1. And remember, again, I have to account for 382,000 units. So I know I had 60,000 units, physical units in beginning inventory. I know also that I have 82,000 units in beginning inventory, just like I had in my previous example for FIFO. And again, when I do the computation, that means I must have had 240,000 units that were started and completed during the month. So now I'm going to calculate equivalent units of production pretty much using the same process that I did for FIFO. Okay, I'm going to start off with my materials percentage. Now, in this case, when we use the weighted average method, it is going to be a little different in that instead of counting the amount of effort required to complete those units in production, I count those at 100%. So I take 100% as to materials times 60,000 physical units. So I end up with 60,000 equivalent units of production. Okay, the next line then, units that are started and completed basically are still going to be just like FIFO. They started at 0 and they end up at 100, so they're going to be at 100%. So I'm going to have 100% times 240,000 physical units. So my EUP for materials is 240,000 EUP. Lastly, then, the units that were remaining in process. I'm going to count the percentage of effort or the percentage of completion for materials with that ending inventory, just like I did for FIFO. And in that case, the units were 80% complete with respect to materials. And in that case, it'll be 80% times 82,000 physical units, meaning that I had 65,600 equivalent units of production for materials. I'm going to do the same process. I'm going to apply the same process now to conversion cost. Now, in the case of conversion cost, I treat them exactly like I treated the materials cost. Instead of utilizing the percentage for the percentage to complete those units, I use 100%. And I take 100% times 60,000 physical units, so my conversion costs are 60,000 EUP. Again, units started and completed during the month, 0 to 100%. So my conversion costs are going to be 100%. 100% times 240,000 equals conversion of 240,000 EUP. Lastly, units that were remaining in process 1 in ending inventory. Again, I want to account for the amount of effort that I put into that ending inventory, the units that were built and available in ending inventory at the end of the month. So in this case, it says they were 30% complete. So the conversion percentage in this case is 30%. 30% times 82,000 equals 24,600 EUP. Just like the FIFO computation, I'm just going to simply add up my materials EUPs and my conversion EUPs. And now I can see under the weighted average method, I produce 365,600 units of effort, or EUPs, for process 1 for materials, and 324,600 EUPs for conversion. Now, again, following the same process for FIFO, now we're going to calculate the cost per equivalent unit of production. Now, the methodology for this is the same, but we are including some additional cost when we do our cost calculation. And again, up above you see the EUP computation that we just completed from the previous slide. So in terms of calculating the cost per equivalent unit of production, we have to do that for materials and conversion cost. And again, the information regarding these costs are in the third paragraph of the slide here above. But what we see is we include not only the costs that we incurred during the period for materials and conversion costs, but we also include the cost that a part of beginning work in process. So we include beginning work in process plus the cost incurred during the period. So our cost in this case come up to a total for materials and total conversion that includes both of those balances. Now what we're going to do, of course, is based upon the total equivalent units of production for materials, which is 365,600, we're going to divide the $968,840 worth of material cost. We're going to divide it by the 365,600 equivalent units of production, and that comes out to $2.65 per EUP. Conversion cost, we take the 324,000 EUP of conversion, and then we divide that into the $697,890, and the cost per equivalent unit of production is going to be $2.15. Now that we calculated the EUPs, again, and I've reproduced both the conversion slide information and also the weight and also the cost per EUP for weighted average. We're going to do the same process and basically trying to determine what the costs are being transferred out of work in process. Again, we have a cost of beginning work in process plus cost incurred during this period minus the cost in our ending inventory equals the cost transferred out of work in process. So our cost in beginning inventory, our materials, are $118,472 and $48,594. Now you can see that you can see those costs right here in the weighted average computation. So the total beginning inventory is worth $167,066. Now the costs incurred during the period are going to be materials of $853.68 and conversion $649,296. So there's our material cost and our conversion cost. They total to $1,499,664, and I've created a subtotal here of $1,666,730. Now again, I'm going to have to subtract out the value of my ending inventory. In this case, it's going to be again, it's going to be valued at my cost per equivalent unit of production and the amount of effort that I put into materials in ending inventory and conversion of ending inventory. Now in the case of my materials cost, it's $2.65 per EUP, and I put in 65,600 units of effort, which equal then $173,840. Conversion cost, $2.15 per EUP, and the EUP for my conversion in my ending inventory showed 24,600 EUP of effort. So my total is going to be $52,890. So my ending inventory equals $226,730. So I take that and subtract that from my total cost of work in process. So the cost transferred out of work in process are going to be $1,440,000. Now if we compare FIFO versus weighted average, and these are fairly simple comparisons, and I'm not using any dollar amounts. But again, when we do FIFO, we know we have, when we do our computation, we have a beginning inventory, we have units that are started and completed, plus we have units in ending work in process. Those are the total units that are basically we need to account for under FIFO. Now what we want to remember is that EUP is computed at the percentage under beginning inventory. EUP is computed at the percentage required to complete the beginning inventory. Important. Okay. In the units started and completed, EUP for units started and completed are always computed at 100%. Because if you start something and complete it in the same period, you put 100% of effort into it. Lastly, ending EUP is computed based upon the percentage of inputs that have been expended on the ending inventory. And in other words, how much effort has it's taken to basically get to the inventory up to that point in ending inventory. And again, we're going to have to do that typically for our materials and also for our conversion costs. Now, if we compare that to the weighted average EUP, in the weighted average EUP, we take our beginning inventory, our units started and completed. So what you see here is units completed and transferred out. That's our beginning inventory. And basically the units that were started and completed in the process. We treat those kind of as the same thing. And there I show that both of those are that way. And what we're going to do in this case is EUP, equivalent units of production completed and transferred out, are always going to be 100% for this particular characteristic. Okay, also then the ending EUP for units in ending work in process is the same thing as if we did it through FIFO. Ending EUP is computed based upon the percentage of inputs that have been expended on ending inventory. And with that, that is the end of our presentation on process costing. And again, thank you so much for your time and your patience.